So, a very common way the reverse mortgage is used is by paying off an existing mortgage. So, in today's case study, you're going to see here a client we closed a couple weeks ago that used the reverse mortgage to stop the existing mortgage payment and had access to some of the equity in her property. So, a little bit back about this client. She lives alone in a maintenance provided area. It's kind of a connected duplex situation where she owns and lives in one side, has complete all maintenance in the front taken care of her, snow shoveling, all that sort of fun stuff. But she had a concern as far as how to pay for some expenses that she knows is going to be coming up. Now, there's essentially three options that we sat down and talked about. We looked at doing a regular refinance, a cash out, and the traditional mortgage, as far as taking money from the property and allowing her to have access to that, but that would have raised her monthly payment. We also looked at a home equity line of credit. There were some concerns there based upon what her monthly income is right now and qualifying for that home equity line of credit. Plus, there were some concerns of what payment that is going to add into her monthly budget, especially since the part-time job she's working right now, she knows she's not going to be working for very much longer. And of course, the third option is using the reverse mortgage. Now, when we sat down and met, we were thinking the property may only appraise for about 150 to 160,000, but to our pleasant surprise, it actually appraised, as you see on your screen here, of 187,500. So when we really started to take a look at what those numbers look like afterwards, we saw that she has to have, or she had to have about $118,000 of home equity in the property, and she'd have a total access to about 68,000 or 69,000. Well, when we see that broken down here, we can see that being that a big portion of the reverse mortgage, of course, went to paying off the existing mortgage. Now, her principal and interest payment she currently has is about $275 a month. While that's not a lot of money, she also knows that when she stops her part-time job, that her budget's going to be cut as far as how much she can spend on a monthly basis. So her key is trying to lower her monthly expenses as much as possible. So this freed up about $3,300 a year or $275 a month. But one of the biggest things it did is it took the ability for her to access the equity in her house in a safe, secure, and a guaranteed way, with this being in the FHA backed reverse mortgage product. So after she paid off the mortgage, essentially she had a total access to about $21,000 that she could utilize in whatever way she wanted. Now she could have pulled 8,200 at closing, and then after 1 year and 1 day, she could access the rest of that 13,000. If memory serves me correctly, she did pull a couple thousand to have set aside just in case for emergency. But essentially, as you see over time, what happens with this reverse when we go 1 year, 5 years, all the way out to 25 years, if she doesn't touch the line of credit, it does have a growth feature. It will increase over time. Now, granted, the loan balance will increase over time, but if you take a look at basic appreciation, so in this example, 4% appreciation, if we go 20 years out, we anticipate the loan balance to be right about 328,000, but we anticipate the home value to be a little over 411,000. So the biggest key people think is by doing the reverse mortgage is somehow the property is going upside down or will be going upside down, or you're going to give it to the bank or whatnot. And time after time, the examples show that that really just doesn't happen. Now, granted, this is using an example of the interest rate of never going below 6.5%. Now, we know in the current interest rate environment we're at that rates will fluctuate, go up and down and whatnot, but they're more tendency to go down on the lower end right now than to continue to go up as they were the last few months. The other thing too is using about a 4% appreciation. Well, I can tell you right now, the type of home she lives in, all one level, very easy accessible, one car garage, just kind of a lot of checklist stuff, will appreciate at a pretty strong value as well. But I do think this is a very fair comparison and representation of what the reverse mortgage looks like paying off an existing property. So every week we'll continue posting these. I hope you find some value and some insight out of this. As always, please feel free to like the channel and also comment down below. We'd love to hear your opinions about it.